morning, team. So, yeah, fun and games in Stockland. We've got VIX rallying, and we've got NASDAQ and US stocks off quite hard as well. When you look at it on the daily over here, it was quite a rough day for stocks. And it was all about the debt ceiling that they haven't come to an agreement yet. So they've now got 6 days to make an agreement, and there was reports saying it's a long way away from um, where they need to meet in terms of the agreement. Services PMIs are all still pretty strong in France, Germany, UK, and even in the US. But manufacturing is all under 50 and performing worse than expected. Under 50 means contraction. But as I said yesterday, it's a soft survey. Don't put too much of a weighting on it. In a couple of hours, we'll have RBNZ expecting to raise rates up to 5 something. And yeah, and then we've got the UK CPI. So with stocks off, bond yields also came off, which is a little surprising. You'd expect the bond yields to be going up, but they sell stocks and buy bonds, which when you buy a bond, it is actually selling the interest rate, so the yields come off. But the yields are still more attractive than owning stocks. So even if there is a deal, I think owning stocks at this stage is probably not the smartest move when you can get a better yield out of it. The UK gilts, out of the German Bund, and out of the US 10 years or 2 years, you're getting a far better deal owning a government bond, and corporate bonds can be even higher than that. Dollar index up a little bit, as we can see here on the daily, and getting overheated. I would like to have seen a bit more of an attraction, or at least just a consolidation above this 103 level before running like that. But when the news hits, your fundamentals such as momentums don't really have any say in it. Dollar yen, yen was very strong across the pairs as well. So there was a lot of flow into dollar yen as well. Let me show you. So you can see here how the yen strengthened against most of the majors, particularly against euro there, and Aussie, which was the weakest currency of them all overnight. And looking at the pound, at the end of the day, it's down a little when we look at the daily. Tried to get back through that level during basically after the European close, but then failed and weakened off that. Euro also tried to rally into the European close, but just after it failed, and had quite a big down day retesting these lows from last week. Would expect with the strength of the US dollar that will probably get broken, and as I mentioned, we will have a 65 handle. I think this support zone is third time unlucky. That's my view. I could well be wrong, but it's back at that support level. I know a lot of people will be buying here to try and lean against that support level. I just don't think the Aussie has the strength to hold it. It's still got some potential downside availability on the momentum indicator there, not so much on the 4 or the 1 hour, but certainly the daily. So what you could see is it come back up to the 66.25 area, this support zone here. Let me just grab that for you. Not there. There. No, not there either. In around there. That's it. 66.30. You can see those couple of lows there. Tested there. I might come and have a look at that before pushing lower. That's what I would expect. And that's it for today, guys. We'll be back tomorrow to discuss more. Have a good one. Trade accordingly.